Great start to Money Monday.
Hey, when fat niggas talk shit,
let's do it. Yeah, let's talk about money. Well, let's talk about taxes. So, I just narrowed it down to like five things. One of the main ones is, the obvious one is make a retirement contribution. So typically you could do like a 401k contribution if you got your own business, or a traditional IRA. You can put like $6,500 away for like the W-2 guys. So basically, what's nice about this one is that you don't have to do it like by the 31st of the month. You have until the extended due date of your tax return. So, if you file on time, you got until April 15th. I like doing it that way because then you get to figure out exactly where you land tax-wise, figure out how much you can put away and how much you're going to save in taxes. So, it's good to wait to the last minute, figure out where you are tax-wise, and then figure out how much you want to put away if you're in that position. One of the other ones that you have to do by the 31st of this year, unfortunately, is, we're kind of getting down to the wire, but if you can get a good deal on any like business equipment or like a vehicle, like a car or something like that, you can get like a Section 179 deduction if it's over 6,000 pounds. We talked about that with the Land Rover a few years back. If you remember that show?
Yes. Yes.
And, obviously if you have a business that maybe you need a new computer or you need a new microphone or some, electronic equipment and all that stuff, then you can get the immediate write-off, but you have to buy it, get the invoice, and pay for it by the 31st of this month to get the deduction for your 2024 tax year.
Real quick, guys. Rumble is showing a screen right now. If you guys can see us, let us know. But Rumble is showing a screen right now on its live feed. So,
is it on YouTube?
Yes.
We're live on YouTube. Yes. All right. Well, we can drop the link in there for you guys. Just come on over to YouTube and watch. Or
black screen on Rumble?
Yeah, it's showing a blank screen sometimes.
That's fine. Come on over and just to watch it on YouTube or X. We're live on X as well.
Cool.
Yeah, but just drop the link. I'll drop the link in there for them. Go ahead, Steve. I'm sorry. So you're saying
no worries. Yeah. So I like the Section 179. So like I said, you could do equipment, computer stuff. Cars are usually good for that. If you're into the construction stuff, you could buy some equipment. Like I got like last minute guys buying trailers that they could put their tools in. I get a lot of guys buying trucks, heavy duty trucks this time of year too. If they could find a good deal.
Steve, could you explain as well why someone would want to do this technique? Because I think it's important because if you're making money, you never kind of put it into like, write-offs. It's almost like you're going to have to give Uncle Sam the money. But could you break down why someone would want to do this before the end of the year?
Yeah, well, because it's a huge tax write-off. So like, a lot of times I'll get down, probably around September timeframe and look to see where guys are at. And then we make this decision, we would have made this decision a couple of months ago. So they would start shopping it out at least, 1 or 2 months ahead of time. They'll figure out, hey, I this truck, they're using it for work all the time. They got guys, the workers, driving it. They got a lot of miles on it. And, maybe they had the vehicle for, 5, 6, 7 years and it's fully depreciated. And they're like, all right, let me just get rid of this, maybe get a little bit of a trade in for it. And then just, negotiate for a new vehicle and then get 100% tax write-off on it.
Right.
Off the bottom line. So then, if they're at a 30% or a 25% tax write-off, you buy $100,000 truck, that's basically a $25,000, deduction, tax deduction. So, you're really in essence paying $75 for that vehicle.
Okay.
In that scenario, if it's 100% business use.
Yeah, that's a pretty good write-off. Okay, and that's number 3, right? Or number 2?
That was number 2, yeah. So those are the 2 big ones there. And then another one, I'm going to save the best one for last because I think this could be probably one of the most, you guys are talking about the stock for Rumble, so we'll get into that one. But another one is doing like charitable contributions. Like for instance, I had a company, like they have some really old vehicles. So sometimes they'll donate them and get like what's nice about that is you can like kind of estimate what the value of that is rather than trying to sell it to somebody and get the money and then report the gain. You get the deduction on your taxes for that for like, for a charitable contribution. So you can get, whatever the thrift value, fair market value of that car is. So, maybe sometimes they'll do like $5,000, $6,000 deduction on it. So that's something to think about, rather than trying to sell something. You got something that's a pretty low value. A lot of people, do a lot of like, they'll clean house and they'll get rid of a lot of their stuff in their house that old furniture, clothes, and then get the Goodwill little receipts for that, and then they, because Goodwill doesn't fill them out for you, so you got to kind of fill them out yourself. So you kind of got to estimate the amounts in it. So sometimes you can get if you're an itemized deduction person, you don't really fall in the standard deduction. That could be a good write-off for you.
Okay.
Especially if you're doing big ticket items, like a vehicle that's really old, it's got a couple 100,000 miles on it, and it's laying in a driveway and you're not really using it. Sometimes people just donate it.
Steve, question for you. A lot of people, bought cars and took big L's on said cars.
Facts.
Are they able to do anything with those losses that they might have experienced with bad purchases with vehicles?
No, on those, unfortunately, no, because they would have deducted them. Yeah, I understand what you mean. Like, they bought them like when we were had a shortage of all the chips, and they couldn't put the new chips in the new cars. And a lot of people bought, a lot of those cars, I mean, they're down 50%, 40, 50, 60%. They bought high. Unfortunately, you're kind of screwed with that. There's not really much you can do other than just whatever you paid for it, you're going to get the straight tax deduction on it, and that's it. And then, I don't know if they sell it, they can, they're still going to be underwater on it, unfortunately.
Yeah, so there's nothing they can do as far as writing off losses or anything like that.
No, because it's not really a loss because they just overpaid for it. So they're just going to deduct it. So if they pay too much for it, it's just, just a straight deduction, and they're going to get the depreciation.
I made a video today
deduction
on my channel saying don't buy a car right now for that exact reason. Yeah,
right now. The instant rates right now are tough.
Because Steve, you know what they're doing now, bro? What's happening is the car prices are low, right? So you're like, oh, cars are cheap now. However, the financing is high. So they get you with the financing. Those basically get you in the deal. Yeah. 0% down. You can get a car today. But when you look at the actual deal itself, you're paying double for the car, triple for the car. And that's how they make all their money. So you're buying a car for a low price, but the financing really gets you in the whole long run.
Yeah,
it's crazy, bro.
If you got good credit and let's say you go to, you're going to buy like a GMC or something like that. The GMC finance company will finance it at a lower rate than the actual market rate. Yeah. And just to get the people to buy the car, they're going to make it up on the price in the back end somehow.
Yeah, they don't lose, bro. They don't lose at all, man.
Yeah, they'll pad the contract with some fees in there, to make sure that they're getting it somehow, because people, it's a mental thing when they buy. They're like, oh, it's only 2% or 1%. The guy gave me 1%. Yeah, but you're probably paying a little bit more for the car. Yeah, or that contract. You're probably padding some fees in there somehow. Mm-hmm. Yeah, because I had a guy. He was really bragging. He got a really nice truck. This is like 3 weeks ago. He came up to my office. Oh, come on, check out my truck. And I was like, what'd you pay for it? He told me whatever. He's like, yeah, I'm only paying 1%. And probably somehow in that contract, whatever. Well, once I'll get the bill of sale and look at it. There's probably some fees in there.
Hidden fees, yeah.
Imagine it. But he's happy with it, so
Yeah.
All right. All right. What was the next one? So that was number 3, right?
Yeah.
Hey guys, get your questions ready because we're going to open it up for Q&A after Steve goes over stuff. Like me and Fresh might have a few questions and we're going to go and open it up for you guys for the CastleClub guys. So we'll drop a Zoom link for the CastleClub guys. Go ahead, Steve.
Okay, yeah. So all right, so here's the next one. You can defer income. So let's say you are, this doesn't apply to anybody, but if you have a business where you bill people and you collect later, my business is kind of like that. So I'll defer, I'll do some work this month instead of billing people and collecting the money now. I'll, maybe, if I got 30, 40,000 in AR or something like that, I'll wait to collect that in January. So then I don't have to report it until January because I'll be in constructive receipt of that. So that's the way you can kind of delay some money. Maybe you got some payments coming in and you just say, I'll just hold it off. Or what I have people do is they'll pay their January stuff early. So maybe they got some extra cash flow. And then the last couple of weeks of December, like right now, they'll start paying January bills ahead of time because they're cash basis. And then they'll get the deduction in 2024 for January if they need it. So that's kind of some way that you can shift some income and expenses from they call it straddling. You can straddle it from one year to the next.
Okay, interesting. All right.
And then the good one, you guys are talking about Rumble stock is up, right?
Yeah.
Yeah, double.
So, I don't think you guys are going to be selling it, right? Anytime soon. You're going to hang on to it. But if you're in a position where you want to sell something, and we talked maybe you bought some. What is it? What was that stupid meme called? The Haktua. That rug
coin, yeah.
harvest.
Man.
That's called harvesting losses. So that even goes for a stock portfolio too. So if you got some stocks in your portfolio or whatever that you don't think they're going to come back, sell it, get rid of it, recognize the loss on it, and then have that. And even if you don't need to use it, you still have it because you could carry that loss forward for the next year. So you could take up to $3,000 this year if you don't have any capital gains. You could still take a $3,000 loss. But then you could just carry it forward indefinitely. But with crypto, what's nice about crypto is that you can harvest these losses and there's a rule that the IRS put in play called the wash sale rule. So this applies to stocks. So if you sell a stock for a loss, let's say you sell it right now, like the 23rd, and you still think that stock might come back, but you want to recognize the loss, what people used to do is sell it now and then buy it back in January, like the first week. But you can't do that for 30 days if it's pertaining to a stock. The nice thing with crypto is if you could sell it, and let's say you feel like let's say you bought some Pulse chain or something like that, and it's down like 99%, but you feel like that thing's going to come at some point, that layer one token or whatever is going to come back. You could sell it and recognize the loss this year, and you could immediately buy it back. I could sell it on the 31st at 11 o'clock. And then buy it back the next day, the 1st, at 7 o'clock in the morning.
Wow.
Really?
So the wash sale does not apply to that.
Okay, so cryptocurrency doesn't. So 30 days if it's a stock, you got to wait. So you can't buy it until February, but you can do this with cryptocurrency.
Crypto, you could buy it like 11:59 and buy it back at
midnight.
1 minute past midnight.
Yeah, kiss your ugly ass girlfriend, then when the ball drops, and go ahead and buy it back.
Yeah.